Welcome back to another episode of Make Money Count. I am not joined today by Justin. Justin is in sunny and probably just sweltering Florida. And I was all ready today to start talking about a new topic. Well, I mean, a topic that we haven't really focused too much on. We got some great charts that I want to show you regarding immigration in Canada. But before I do that, I want to talk about housing. I did a radio show this morning on 6:40 a.m. and I started thinking that leading up to today's podcast, I started thinking that maybe we were spending too much time constantly talking about the housing market. Condo sales are down, prices are being driven down, interest rates are too high. And then I got on the radio show and Alex Pearson from 640 said that the way she started the segment was, you cannot escape news about real estate right now. Every single day we're hearing something. So I figured I would just drop a little piece on what's happening right now. So we have a real problem in I'm just going to talk about Toronto real estate. We got a problem in Canada, but in Toronto real estate, we got a huge problem. And that problem is not getting better because interest rates are not looking to come down as quickly as the real estate market needs them to come down. You can look at the bond yields chart right off the bat. Today we're at like 3.6, Austin. Yeah, 3.615. So that's up from where we were. And the reason for that is the market is telling us that we're probably not going to see a 25 basis point drop in July. Again, we got another inflation number coming out before that meeting, so maybe we will see one. The problem is one ain't going to be enough. We have a real problem. The problem is that the investor has left the building. If you want to think about condos in the city of Toronto, in Canada, it was an investment class. It was like buying a dividend stock. When interest rates were low and property values were more reasonable, you could buy a condo and you could rent that condo out. You'd get nice rental income. You'd take some, you'd pay off your mortgage, you'd pay your property taxes, you'd pay your maintenance fees, and you would have a dividend remaining for yourself. Simultaneously, you could expect every single year, over some periods, every single month, that asset to appreciate. So not only was it a dividend stock, it was also a growth stock. And then, like all good things, like Nortel at $126, it came to an end. And the first thing that happened with massive increases in interest rates is the serviceability issue. People could no longer service their mortgage with the rental income that was coming in on their property. As a result, they were contributing to it. At the beginning, that was okay because, hey, it's Toronto and property prices are always going to go up and condo prices are going to go up because we have a shortage and people need somewhere to live. The problem is developers built so much and there's so many condos coming into the market right now. We got 90,000 condo units under development. We have supply coming in droves. And now we need investors to help sop up that supply with demand. But when interest rates dropped, when we just saw that 25 basis point drop, it didn't spurn more buyers. What it did was it motivated sellers. Investors were waiting for the drop so that they could unload their condos. So what we saw happen was the opposite of what the real estate boards would have us think was going to happen. It didn't bring enough demand into the market. It just increased supply. As a result, further drop in valuations on condos. What saves this? What saves the price of a square foot of a condo in Toronto? Well, I think that we've been taught that interest rates will help, right? I think that we know that one of the massive variables that goes into demand is interest rates. So if interest rates can come off, demand will come back into the market. But how much do they have to come off by? 200 basis points at least. If demand comes back because interest rates have dropped, it needs to be enough demand to sop up supply. And the supply is not just the 90,000 units that are coming to market. The supply is also all of the entitled developments from all of the developers who have shelved those plans, who are sitting on the sidelines, waiting for an opportunity to release those projects for sale. What else can prop up the demand that we need? We're seeing it already a little bit right now. We've been hearing about it. We've been hearing rumblings about it. banks who have lent 100, 200, 300, $1 billion loans to developers on projects are allowing end buyers to purchase their units at their purchase prices and finance them at those purchase prices instead of at the reduced market value of those condos, so that instead of having one developer borrower on the hook for $500 million, they have 500 end users on the hook for $1 million, diversifying the exposure that they've got, right? Diversifying it against multiple borrowers. Although that may be helpful in the short term, what does that do in the long term? Listen, I get it. We saw this strategy already play out over COVID. You remember? Infinitely amortizing mortgages, allowing loan forgiveness. The banks did whatever they could to prevent people from defaulting. The banks are continuing to do that. Is that because real estate's too big to fail? Are we going to continue to see banks and the government come in to help out this situation so that these investors, we call them investors, right? They're not the big bad boogeyman of investor. These are baby boomers who had money saved up. They are people that decided instead of buying a mutual fund, they would buy a condo and they would rent it out. These aren't massively wealthy individuals. So bailing these people out is bailing out essentially the middle class of Canada. The upper middle class of Canada. We've got a real problem. Another option, another thing that we're seeing is massive immigration. Does massive immigration put a floor underneath these valuations for condos? Not so far. And boy, do we have a lot of immigration. So I think we've got to be really careful right now when we look at condo prices. If you're buying for the long term, real estate's going to be a good investment. But what happens here over the short term? What happens here when supply continues to come into the market and we've got a Bank of Canada that continues to be stubborn with that overnight rate? What happens? Let me know in the comments. Anyways, thank you. Don't forget, like, subscribe, all that bullshit. Make money count.